Can you hear me okay?
Yeah, I can hear you. Can see your screen, Samantha. So it's been such a long time. My fault.
It ha it's
I own it. You know, we had a little
forgiven. I
we had a
I'm
little lovers
so
quarrel, and you look at and we we've made up, and
it, you
I
know
have to.
what? There's always two sides to the market, right?
Yes, yes, there is, and
I'm so glad.
I know you excel in bear moves. And I just know that you were probably really having some great trading opportunities that you were showing people and doing for yourself. So what do you make out of the last couple of weeks? Where are we? I'm interested in seeing your radar screen here.
Well, thank you for, first of all, for inviting me. And it is true, I am actually much better at calling tops than bottoms, but that's because bottoms are tops of the process. Bottoms are typically an event. And in that particular case, I have more time to find divergences.
Yeah.
So it is easier for me to look for tops, and that could be in any time frame, honestly. Because I do the chase, the swing, the trend trading. But this is very much important for this particular drawdown that we've had. So I don't know if people know who I am, but I want to just let you know quick. I do
Go ahead.
have a Twitter site, which obviously you and I follow each other, and it's where I do post some of my macro thoughts, because that's the backdrop I use against this technical, drilling into trade ideas, absolutely. And volatility is my thing. I'm looking for volatility to reprice everything. And in this market, we have our fair share. So this is my Twitter channel at Samantha Laduc, for those who might not know. I also have a YouTube channel. And in fact, I did an online presentation just last week on exactly what I saw in the divergence to time this with precision. So literally just play by play by play, day by day. I think it's important. Also, the option market, and not the usual retail unusual option activity, but at the vol strategies, the CTAs, and using that the gamma positioning to better size up when we're being pulled higher and when we're being pulled lower. So I definitely recommend checking that out.
Okay, so Samantha, I saw that first tweet that you had out, and you said your most important market tell has triggered a financial crisis.
Yes, it has, and I pinned that. So I actually am
What is the tell?
Well, I'm going to show you that. So that's
Okay.
actually what I was kind of getting to. I just, in this YouTube thing, like, I'm really bullish IPOs, bullish, bullish, bullish. And then December 18th, I'm like, nope, not anymore. And in fact, I tweeted on the 18th that I thought the market was going to break. And Friday was it. Next day was actually it. It was the yen was just not performing the way that it should.
Right.
And so I do have some free stuff here that goes into explaining what I saw. But yeah, this is what I wanted to go over today, because I don't think this is safe. Even though we're having a really nice bounce this morning after the Fed bazooka yesterday, this is definitely still not over. And I'm going to go back a little bit. Market thoughts. This is what I post for clients actually every day. And right now, my two recurring themes the past month: liquidity, liquidation. Which is better? Like, which is going to win this boxing round? Okay, so what's been going on with the Fed. We don't need to rehash what they did yesterday, what they've done with repo, what they've done with emergency rate cut, what they're likely to do on Wednesday when they announce the next set of cuts.
Yes.
I'm going to assume that your audience is quite intelligent and knows what's going on in regards to Fed liquidity, global liquidity. Everyone's easing. Everyone's trying to infuse liquidity to stabilize market. Guess what? Liquidation right now is beating liquidity. So yesterday was a nice tell where you could see that, algo bounce on news of the Fed bazooka, the QE, and 101.5 trillion also in repo support next 3 days. So that's just not enough. I think liquidation has been the theme. I saw it on Tuesday, the 25th, and it was massive. And I'll show you what I saw from a retail perspective, because I'm a retail trader. I actively trade for a living, and I support clients.
They were buying dips for 2 weeks, right, Samantha?
They were, this whole thing from November until February was just a sold to you market. I kept saying it over and over again, but it was very productive, especially in my particular trading room. We were trading IPOs just 3 months solid, November, December, January. But it turned into, of course, the Corona crash, right? The coronavirus crash. So right now, my whole thing was, okay, this is serious. I said back on January 22nd that this was going to be the story of the year of 2020. And now the real test would be, could cowbell, in that boxing match, if you will, take out COVID-19, or would COVID-19 overpower cowbell? So it's round by round by round, right? Who's going to win? We're like maybe
What's a cowbell?
Cowbell's the Fed, global central bank.
The Fed's a cowbell. All right.
Yeah, that kind of cowbell. So I don't need to tell you right now which is winning. We just dropped 28%, right, in 3 weeks. Big, big, big deal. So we have a major liquidation event occurring, and underneath the surface as well, with repo and folks are just saying bye-bye, I'm out of here. But there's some things that I think were kind of interesting. Early on, I was trying to figure out, I didn't see this as a V-shape at all, and I'll show you why. But I also wasn't, it's going to be its own thing. Is it 2008? This sentiment, I kind of do this overview in my head and also for clients. We got sentiment, technical, fundamental, macro, intermarket. I also do the quant. Read, I'm not a quant trader, but I study it so that I can be on the right side, if you will.
Yeah.
This is a human issue driving financial stress.
I like that. Yeah.
2008 was a financial issue that caused human stress. This one is worse. So I do not think that this is a very tradable bounce, but this is not a safety. This is not, the markets are broken. It's not safe.
So do you tell people to go to 90-day T-bills and just roll them, especially since this
cash.
week?
Cash and a multi-currency account preferably. So
technical.
Oh yeah. So
multi-currency account. Where do you do that? Where do you do that?
Let me get through this post.
All right. You know what? I'm just going to let you go.
Because I know we don't have much time.
Go ahead. Make it a lecture, Samantha.
No, I want to get through this because I want you to kick it apart after.
All right.
So technically, the rate of change of selling is unprecedented. Market is down, obviously, in very quick order. This is, these are price insensitive sellers. That's my contention. The fundamental backdrop, no one knows where's fair value. On pricing in the impact of COVID-19 to company earnings, growth, even the policy costs of what's happening right now. The macro, clear liquidity crisis, and it could lead to solvency crisis. It will definitely take some folks out. I'm not just talking hedge funds in the risk parity trade that has been unwound and is still unwinding. VIX is still bid. That chart has done nothing wrong. So let's update some charts, big picture, because I think recession watch is actually on my radar, and I want it to be on other people's radar because they might not kind of say, it's a distant problem. I think it's going to be here sooner than later. And this is one chart that I have, shown vertical lines, recession, steepening of the yield curve, flattening. We are really, really close to moving above this zero line, which is nice. Intermarket tell my stuff, right? This is not a macro. I can listen to Raoul Powell for all the macro. This is my intermarket tell that says it's not safe.
Okay, so with the yield curve beginning to steepen, some people would say, well, that's good. That means we're recovering. We're not inverting.
Yeah, that's not really good. So,
okay, well, I'm just saying. Go ahead.
So this is not really so helpful when the initial yield curve inversion, takes place, and then trying to time the market. What I actually like is a little bit more intermarket, which says, you know what, we're actually going to roll over even more. And this is one of the things that triggered recently this week. So we have been in nice, big picture. I'm talking about for trend trading, right? Trend is broken now. That's basically what I want to get.
That's what you use rate of change for.
Correct. Another thing I use, I love this Gap SPX earnings guide. And if you go all the way back here to late 90s, and this was pinned on my tweet, but you'll see it here. You can see that 8 times out of 9, this has been a fabulous trend trading timing vehicle. Now remember, I chase, hourly, get swing trades for weeks and months, but I'm talking big picture. Is the trend broken? Because most people have been trying to buy every dip in the past 3 weeks and they're getting hurt. So my point is, well, we're kind of at an inflection point, right? It looks like it's going to tip over. What on earth, maybe we just pop right back up. Earnings are going to be hunky-dory. Well, come on. We know they're not going to be. Take a look at Goldman. They just revised a negative EPS year over year for the next 3 quarters. So what do you think is going to happen to my Gap SPX intermarket chart? It's going to roll over as well. So I think the recession watch, people don't really economists, they have their own models. It's not what I use. I'm looking at the steepening of the curve. I'm looking at my rate of change. I'm looking at negative EPS growth with my Gap chart analysis. And probably you've seen this before, the unemployment claim in regards, if I can pop it up. It's not opening. Anyway, this is intonating higher, and we know we're going to have higher next month's reading. There's not a question. It's going to go higher for March. It's going to go higher for April. We have layoffs. We have just retrenchment as it relates to company safety. So this all leads me to aside from the macro considerations, this leads me to be very, very cautious that recession is here. The market just doesn't know it yet. So let's move on to when you asked about the tells. So I do this work in SPX, and it's my stock bond volatility ratio work. Yeah. And I warned clients back in February, and actually I go over this every single day, but I warned clients that this divergence of VIX above the stock bond ratio was very, very negative and worrisome, right? So that's one of the reasons why I called this a sold to you rally. Like underneath the surface, it was in danger. I had a dozen charts that showed massive divergence. So timing it is obviously where you have to go on narrow, very, very narrow time frames, but that's what I do. I love playing volatility. So this is an initial stock bond volatility ratio, just as an example, where I warned we're in trouble. This is where we are today. And I don't know if you can see this.
Yeah,
but,
we can.
Okay. So I told clients that if this ratio gets above the 65 moving average, okay, it is short at will. Literally, it's what I wrote. Short at will. Nothing's going to be held down. When this gets above the 200 week, that's a financial crisis. And I have not seen that since 2008. So that's a big, big deal. And that's when, after the 20% drawdown, it was Monday, this past Monday, I was depressed because it triggered. And I said, you know what? This isn't done yet. We're not actually going to have a correction, just a correction. We're going to have a financial crisis. And I'm going to hold to that because my intermarket tells me we're there. My recession watch indicators tell me we're there. Look at credit, just from an intermarket standpoint. Yeah. I can go over macro reasons, but this is treasuries to high. Huh?
Yeah, junk. Yeah.
This is junk. It's high yield. So it's that rotation, out of high yield into treasuries, right? You can see what's happened with lovely TLT. But my point was, this is not at all looking good for oil, and if it's not good for oil, it's not going to be good for the bond holders, the credit markets that, hold this debt. I was very worried that this was going to explode higher. And I did not know the oil war was going to be declared by Saudi Arabia and Russia would join in, and the Arab Emirates. Right. But this is where it is today. Yeah. That's not correction territory. That's price insensitive liquidation.
Panic.
That's panic in the credit markets.
Yeah.
Now I can show you actual yields, of course, have also been spiking, and spreads and all that jazz. But my point
is, TLT had a lousy week in face of all this carnage.
No asset is safe. And I wrote that the past few weeks. No asset is safe, not even gold.
Yeah.
No question. They're going to sell gold as a collateral. It's collateral when they have margin calls, whatever. The Fed, I think, was behind this recent one. I have a tweet on that. Here's another thing, Brett. This is what I use as my bread and butter, okay? This is big picture, and you can't really tell, so I'm going to bring you on a smaller picture. And by the way, we're in bounce territory, but this...
Yeah. Wow. Yeah.
Not like others. This is the NYSE Composite Index. This, every day I'm looking at this stuff, right? And I have a particular relationship with intermarket analysis. It's my thing. This is not like the others. And I'm talking about any other correction or crisis. It doesn't even look like 2008. It's worse. Yeah. So I was looking at this, kind of head and shoulders up here, warning clients. That was a big deal back in January 2018. Yeah. I doubled my account in 2 weeks because no other time had it been this elevated. Guess what? We tagged and came right back down. It's not done.
Yeah.
It's not done. So I'm quickly trying to get through because I know.
No, it's good.
Okay.
Right.
Here, this is another kind of thing that people don't necessarily look at, but I look underneath for patterns as well as divergences. So Morningstar reversal on this cumulative 4-week new high, new low chart. It happens to be from TC 2000. The other stuff you saw was in stock charts. I also use, charting in my trading platforms, but these are, kind of unique, if you will, to this platform. This was a bottom, a Morningstar reversal in that Christmas Eve massacre, right? We went V-shaped. Mnuchin called the banks. Okay, Mnuchin called the banks a few days ago. Didn't help.
Yeah, they were at the White House saying how strong they were. When they were really there saying, look, President Trump, we've underwritten a lot of shale oil debt.
And not just shale, but it's also the fact that they don't want to give it out because they don't trust they're going to get it back. So this is, by the way, on the floor right now. If you look fast forward, this is the 100 week. You can use it just like any other moving average, right? I mean, I chart everything. This Morningstar reversal, island, blah, blah, blah. Morningstar reversal, island reversal on a daily. It is all the way down here, and it's been straight down. Never, ever happened like that. And I wrote, everyone thinks this gap on Monday is going to get filled. They're so happy. There is nothing, relatively speaking, for a floor. There's nothing. And then, of course, I said forced selling meets natural selling. So the CTAs, of course, they get their levels where, they're negative gamma, they have to selling begets selling. Same darn thing in the natural world where we're like, that's not good. And we're not talking unusual option activity from retail folks, or small institutions, but the largest group of assets under management, they're even slower look back period. So once that, it's just a waterfall, and we saw it. It literally, it produced exactly what I feared. And every single day, I saw massive distribution, and every single day I told clients in my live trading room, do not cover. There's no reason to cover. I see no floor, zero. So the other thing was this gold SPX intermarket analysis, which is literally, again, pattern recognition with a ratio. And I said, guess what that means? Gold could even stay where it is, and SPY falls, and SPY falls. So you know where this is right now. It's way up here, right? Yeah. So the point is, when you have all of these kind of coalescing and, at the same time, there's this convergence of fear, volatility. This is actually the 3-month, but it doesn't matter. You get the idea. Volatility is really a big deal. I cautioned when we went into backwardation, which, by the way, some portfolio managers are wicked smart. As soon as volatility goes into backwardation, they liquidate. And they will go back into the stock market when we're back in contango. Now, I cautioned this could be several months. And I said, literally, this could be several months on the 25th. Don't think that this is going to be just a V shape. I don't think so. And I had also cautioned because we did an overshoot. I love overshoots, right? Like you can look at the dollar yen and you can see where it was a complete head fake back on the 18th, 19th, 20th. Beautiful. It's, in other words, the first move is the wrong one, and then it has the energy to explode. You can see that with a dollar a few days ago. Looked like it was going to break. Knew that thing was going to bounce back up. So this is also the outliers revert with velocity. And that's where I go into my volatility. Now look at this. You can't even see the scale anymore. Okay, that was the 25th. This is now.
Yeah.
Look what it did to my axes. And look how low this is. That's not like the others. So I am contend also we closed on the lows. We are obviously still in, I think, panic mode. It looks very orderly, but it's really not. So I presented this to clients where I think we're going to have a little bounce. What do we have in this morning? Okay, this was just taken. My price target for this week was 2,400. It originally was 2,666. And then I saw what was happening under the surface and I said, nope, revising that, 2,400 for SPX. Now, this is bounce worthy. That's all I'm giving this market. 5 to 10%, okay, fine. And if we get some kind of central bank, debt jubilee over the weekend, we can go higher. And we got a wall of puts that need to be rolled or covered, which can by the CTAs and the quant, the vol strategists that have, been playing this VIX explosion and are actually unwinding that risk parity trade. I think that could actually create fuel for a sizable bounce into options expiration. But
Which
then
is when?
Next week, next Friday.
Okay. And
But
the debt jubilee is going to be on what? Giving people time, like on student loans, etc.?
I don't know what they're going to do. This is just way too big a problem. So
here's the question, Samantha. If this is worse with everything that we've seen than 2008, why are we talking about recession? Maybe we should bring up the D.
I can't do that. So my crystal ball is 3 to 6 months. I'm really good in that time frame. I'm not.
But it's worse.
It is worse, but I'm just telling you, I'm not good with that time frame.
That's PR. That's public relations. All right, go ahead.
So my last point, because I know the market's opening, you want to kick me off. The big risk and very real risk, I told my clients yesterday morning, and I also public service, if you will, because I think it's a risk.
Market holiday.
Oh my God, absolutely. And the biggest, of course, as an option trader, I'm like, be aware. This is not going to be good for short duration. Add some wicked time on that. And more importantly, if we do close, and then let's say we're closed for 2, 3, 4 weeks, right? Trying to get COVID-19, quote unquote, under control. When they open it up, they're only going to open it up on good news. So anyone who is strongly positioned with puts, right, or short is going to have their head taken off when the market opens, potentially. That did happen, in 9/11. It happened in 9/11 when we opened, days later. So I used this morning, actually, where there were hundreds and hundreds of monkeys in Thailand going after one banana. And that one banana represents liquidity. And those monkeys are the bankers. Be careful. I really think right now with COVID, it is capital. This is what I wrote clients exactly. This is exactly what I wrote clients. Capital preservation meets life preservation, and with that, know what you own.
Okay, so Samantha, great presentation. What are you doing personally about this coronavirus? Social distancing with all the money that you've made in the markets? Do you have a bunker somewhere?
No, I don't even have a mask.
Okay.
No,
so what do you think is going to, I'm sure you looked into it. What's your view?
Oh my God, I have studied this and I warned about this in January. It's ridiculous. But here's the deal. I really think that this is not panic worthy from the personal standpoint until it reaches us individually and our families. Then we're going to be in a whole bunch of pain and suffering. I am trying to stay focused on the capital, the preservation, the warning of safeguard, so people don't have that added stress. Does that make sense? So for me, I live in a bubble. Same house. I walk my dog. I don't get out much. I'm not and I'm young and I'm healthy. all that.
Okay.
My fear is not, and my anxiety is not around contracting COVID-19. I think I will. I think what a large percentage of the population will, and then a smaller percentage will be seriously sick, and then a smaller percentage still will die. And it's real. And it's the ineptitude of what's going on right now with political leadership is extremely frustrating. And I don't know what else to tell you there. I don't
Is
have
this a repeat of the like 100-year cycle of the Spanish flu
Yes,
pandemic?
and there's really a wonderful video. I sent it to my son. My son sent it to me, and at the same time, like an email, it was hysterical by Joe Rogan, and
Oh yeah.
yes, I also retweeted that. It's a fabulous. The first 15 minutes it goes off,
Yeah.
and then it comes back on. But I think that is the awareness we don't have is the intensity of this disease, but also the impact on our economy. And of course, I think life preservation meets capital preservation. And my focus has been, it isn't getting sick right now. It's the added pressure of having a very sick market. And for those who are traders, my clients, and money managers, my clients, I want to make them aware just as much as the impact of the disease itself personally. I'm not a health practitioner. I'm a market analyst, and this is my thing.
Well, Samantha, Corona, fear that I'll own you. Born in a lab in China. Spreading
Well, I don't want
that.
No, I don't think that. I actually don't think that it's worth our time to say it's made in China at all. It doesn't do us any good.
Why?
Because I think xenophobia and racism is bad. And I think
don't you think the streets of Hong Kong are pretty quiet now?
I think that this is a financial crisis, and it's also a personal responsibility crisis. I think we have to help each other and not pile on to the blame game, because then nothing will get done and we will hurt ourselves even more.
Okay. And do you think we'll have elections this fall in the midst of this?
Oh, I don't. I think I can't think that far ahead. Honestly, I did say that a few weeks ago, that this was Trump's card, that he could cancel elections and secure himself, some more time. But it's too far out there right now, and I'm not going to make. I think it's a high probability, but right now that's not in my.
Go with your strengths,
3 to 6
Samantha
months.
Laduc.
Exactly.
Go with your strengths. Samantha knows markets, and encourage everyone to follow her. And as you could tell, she's very passionate about it, has conviction about everything she says. And was nice talking to you again, my trading warrior sister.
Oh, thank you so much, Dale. Have a wonderful weekend, and be safe out there.
Yeah, much health and many pips to you and your people.
Thank you kindly, sir.
All right. So everyone, remember, don't just count your pips, count your blessings. Stay healthy, stay safe, and stay with ForexAnalytix. I'll talk to you later. Have a great weekend. Adios.
Bye.
Bye-bye. Trump.